Good afternoon. This is Chris Brecher with the Simpler Stocks Mastery Wednesday video. What is today all about? Today is all about an overbought sell-off. No more, no less. An overbought sell-off. All you're seeing in here is that overbought right here. And the odds are of this having a big old breakout are much lower when it's overbought. So that's one part of the equation. That's only one part. There's a lot of differing things in here, and let me show you what we're talking about. So here's TradingView. Those are little circles for you. Why on earth am I showing those circles? Because I'm festive? Well, yeah, but that's not the reason. The reason is this. I'm watching the divergence between the S&P futures and the bond market. This is the 4-hour chart of both. Now, before you say, yeah, they could stay divergent, sure they could. But look what happens if you zoom out and look at the correlation overall between the bond market, the stock market, the rise in the bonds, the rise in the stocks, the sell-off in the bonds, the sell-off in the stocks. And what do you see now? The bonds are all the way back to when the ES was 40.50. So it was very hard to shorten the hold today, that's for sure, unless you were ultra short-term time frame. But the bond market closed on its high, but it was hard to buy because the S&P never looked good. Now, the other thing a lot of people ask is, what do you mean about it didn't look good? Well, I know it's down, and a lot of people say that, and I know it drives people nuts. ES down 64, yeah, it looks bad. So obviously it looks bad. It's like if a football team's down 40-0. Yeah, it looks bad, but you don't need a commentator to tell you that. So unless you're the Jacksonville Jaguars, now that's different. 27-0, they came back. That's my hometown. Now, getting back to it in here. Definitely, I like to use multiple factors. Now, when I use multiple factors, it could be ticks, but most of the time, it's some simplistic thing, because I'm a pretty simple person, like this. The advanced decline. So you have on the left that the bond market's on the high. No doubt about it. Bond market's on the high. But when the ES attempted this rally, right here, the advanced decline refused to go higher. In fact, when it did that rally, it was still down for the day. In fact, if you zoom out, you see what I'm talking about. That's ugly. The whole thing is if you're going to have, and I'm going to clear the drawing set for you. If this is more likely to break up, number one, you don't want the 15-minute to be overbought at resistance. No doubt. That's one problem. The next problem, though, is when you have that kind of bounce, it was about 12 points, you should have seen these advanced declines go back to unchanged because they held up great all day. That was a big tip-off that the markets weren't going up, at least not today. The divergence between the bonds and the ES is tremendous. Now, most of the time I've seen this, that's pretty dramatic. I'll put it on an hourly chart. The few times I've seen it this dramatic are either if there's some kind of systemic risk, geopolitical news, or so on. This time, it's just because the ES was overbought, I guess. I don't know any other symptom except the Fed says that they might tighten longer than expected. Some of the Fed people said that. Some of the other ones said they think that 2025 is about it. And there are other ones that say the Fed funds need to go to north of 5%. So that could be the divergence reason. On the other hand, they've been saying that for a long time, and the ES has been going up. To me, this is just an overbought sell-off, but we haven't seen any kind of turn yet. So let me give you the expectations of where a turn could be coming in. The SPX, there's your gap. I wish I could do circles with this. I could do it with TradingView. There's your gap. So there's your hourly. Now I'm going to put it on an hourly on the left and a 15 on the right. There. That gives you a great perspective. Where are the support zones? And I'm telling you, the prior tops become support. So you got that. You had this. But now you have this. That gap. So that doesn't mean things have to fill the gap. But what it means is as it's going down, that's the path of least resistance. Right there at 39.20. The big support is 38.80, as you can see the prior tops. This is more like a W pattern with a breakout here. So that's where a massive support is. I don't know if it's going to get that low with bonds on the high. Something's got to give. Either the bonds have to sell off or the S&P is going to bounce, in my opinion, unless some extraneous factors happen, which I haven't seen yet. So that's what I'm watching in here that you're not seeing it. Now, there are a couple of other things to watch, and this could get exciting. There are a number of stocks that look like big old breakouts. Like I said, though, I do not trust breakouts or even close to breakouts if it's this overbought. I just can't do it. Now, could it break out when it's overbought if the bonds are on their high? Sure, they sure could. This was overbought. And look at the bottom. Yeah, it did a little wiggle. It didn't go straight down. It wiggled. And then it went straight up. So you can't just go, oh, the ES is overbought, it's going to get killed. I'm just saying that there's a divergence that's really important. Now, the next thing is, let's say me or someone else wants to look at long ideas. Well, the first place I'm going to go is I'm going to go to the stocks that look great longer term. So let me give you some examples of what I'm looking at. I'm not saying I'm buying yet. So there's a couple of ways to play. You could go and try to buy the ES in this zone, or you can look for things that show unusual strength tomorrow. And if the ES bounces from that zone, those will probably be the first to go up. So let me give you some examples. Star Bulk Shipping. Are you really going to buy when the whole market's overbought aren't working? No. Are you going to buy if it gets back down to this support level? Probably. I can even look for cheap calls for Friday. How about GNK? Another shipping stock. No way I'm buying when it's overbought. Every time I've bought this stock when it's overbought, I don't do so well. Do I want to buy it if it has a crack down to that support? Yeah, right in that 15 level. Because longer term, that could fill the gap all the way up at 18. Wow. So just keep that in mind. There are definitely some good-looking stocks, just not today. ServiceNow, already overbought. Now, this is an interesting situation. This has earnings next week. You're talking about a stock that had an ugly candle. It acted great a lot of the day. So now it closed on its low at support. These, believe it or not, are stocks that eventually I think could go higher. Remember, we had butterflies at 405 until I had to go to the hospital. Those butterflies went from $3 to 20. So that was pretty exciting. I'm glad I posted them. I posted the exit too early, 4 to 8. That was not bad. This had a reversal candle. If I start seeing these reversal candles be followed by another rally, and this little thing, like the bonds, turns back up, that's going to be a big tell that a lot of stocks that have good technical setups are going to be buys on dips tomorrow. So let me give you some others. There's MongoDB. Yeah, the same kind of thing, but not the amount of support like ServiceNow. How about another software service? Splunk. Well, not yet. Even though it is in a support zone, if I'm going to play one of these software service, I want to buy the one that if I'm right, I have a lot of bang for the buck. You see what I see later in the month or earlier in February. Yep, Hubs. Now, all of these on a daily chart are trying to break up. It's just that they're already overbought. Are they more likely to break up, barring any bad news, if the bonds stayed near their high? Absolutely. But the initiation is the key, and I just don't see it yet. Do I want to play it? Yeah, just not yet. So I'm basically going to build a watch list of these small stocks, but there's another group we need to look at. The banks. Goldman Sachs. That got nailed on earnings, no doubt about it. The problem is a lot of the secondary ones like Synovius have already gotten destroyed prior to earnings. Synovius has earnings tomorrow morning. I got to think on any sell-off to support, then I look for reversal candles. Just like UAL, that had great earnings, has already rallied into earnings and then reversed from resistance. So that's how I'm going to trade it. Tomorrow, these are the earnings on the bottom left that have earnings tomorrow morning. There are actually a number of them that are bank related. So some of these have gotten trashed this week already. And I think those are the ones we look at to buy on dips. So take care. Have a great night. Hope you listen to my webinar tonight. And I will talk to you first thing in the morning.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me.